Hi, okay, we're talking about risk in the markets, and we're talking about leverage, I guess you could call it. And here's an interesting thought: is you see these, you'll see the big things like this. Some trader made 500% on his money, or 1,000%, or some guy took $5,000 and made a million in a year. Well, it can be done, obviously, and it sounds great. But again, here's what the problem with that is. You got 10 guys that have $5,000 and they're going for the million in one year, and they bet it all on one or two trades, or they keep betting it on a pyramid of a couple trades, and then you're going to have one guy get lucky, and okay, then he's the guy you hear about. The point being is you might make the money doing that. Of course, it's possible, but the odds are so much against you. It's That's not the way to make money trading. Um, the point I'm trying to make is it's better to make consistent profits with lower risk, and then over time, over a period of years, you build up your trading account. So I just can't stress enough how this goes back to W.D. Gann in his books back in the 20s and 30s, and Jesse Livermore, who everybody's heard, Reminiscence of the Stock Trader. Those guys, Livermore made millions in the market, and he lost it all because he overtraded. W.D. Gann talks repeatedly in his books about trade with low risk. I mean, this goes back, and the reason it goes back because it's just human nature. Everybody wants to make it all at once, and just that's not the way to do it. If you have a $5,000 account and you pick a stock and you bet the whole 5,000 on one stock, and if you get lucky and that stock happens to go through the moon, and you make $50,000 in one year it's on some stock that you just happen to hit the right stock, that's just luck. That's not really trading. That's just pure luck. And again, in the end, you're probably going to lose it all back. Matter of fact, that's pretty much what a classic story in trading is, that if you do good at the beginning, it's really worse for you than if you don't do good at the beginning, because if you do good in the beginning, you have a tendency to think you'll always do good. And there's a lot of mental things to that, where if you hit it right off the bat, you think trading's easy, and you'll always take big risks until you finally lose it all. I got another little story, I guess, that I just thought of because of that. Is I had one lady I was talking to one time, and she said she never lost in stocks, and she had traded like for a year or something. And I think basically what the story was it was a bull market, and she would just buy, and then it would go up a little bit, and she would sell out. So she was just, the stock market was just going up all the time, so that really was something that she could do. And she kept telling me she never lost, she never lost. Again, this is a true story. And I'm thinking, nobody ever doesn't ever lose. It's just not possible. And I questioned her on it. She kept saying, "No, I've never lost. I've never lost." And I thought she is going to be in big trouble one of these days. And I think I even tried to warn her. She was emailing me. She was taking my stock newsletter. And then finally one night, she had bought, I think it was Martha Stewart, and she bought way too much because she was got in the habit of thinking she was never going to lose, and it crashed against her, and she was way down, and she was like pretty much wiped out. And I'm like thinking, if you have been making all this time, how could you be wiped out already? But those little profits, even though she would never lost for like a year supposedly, the profits probably, she might have built up $5,000 profits. Well, then again, that's just an example. I don't know the exact number, but then what happened was then she got overconfident, played too many shares. It was Martha Stewart. She bought it at like 30, and it collapsed down to like 25. I still remember I went and looked at the chart after she told me about it. And it probably even wasn't that bad of a trade if she would have played a reasonable amount of shares and been able to hold on. It probably went up after that. I don't even remember, but again, she got in the situation where she traded too much and she got behind and she didn't know what to do because she had never been there. So again, if she would have traded a reasonable amount of shares and had a reasonable amount of stop, you wouldn't get in those situations. That's what I'm trying to do with these videos, I guess, is keep anybody that's listening out of the situation where you're just all of a sudden you're in a panic situation and you're behind so far that you don't know what to do, and you can't. There basically is no right answer because you're just basically behind, and you can't hold on to it because if it did keep going down, you'd be wiped out, and you should be holding it probably because it probably will go up, but you can't. So again, the I guess the answer is less risk, less risk, less risk, less shares. Just take it slow and easy and a little bit at a time. Even if some people, here's another thing, people will say if my newsletter, I've brought it down to $99 a year specifically so everybody can get in on it. But most newsletters are like 99 a month. A lot of people, what they'll do is they'll even think, well, I got to pay for my newsletter, so I got to make so much money. And that's not the way to think in trading. You just have to, even if you're paying 99 a month for a newsletter, it's the learning to trade that's important. And so if you pay $1,000 for a newsletter in a year, and you only make $500 trading, but you've done it right. You've followed the trades with low risk all year long, and you're learning as you go, and you're learning to trade. Then it's worth not making the paying off for the newsletter that year. The newsletter was worth $1,000, even if you only made 500, because you're learning and gaining knowledge, and that knowledge will be worth thousands of dollars in the future. So I better wrap up this video. Thanks for listening, and I hope I'm not being too overbearing on this risk thing. But the whole trading all revolves around risk and keeping your risk low, and you got to find a market or a amount of shares or whatever that keeps your risk low to where you can handle it. Like if futures, commodities is too much risk for you at this time, then you just have to trade stocks whether you want to or not, because in stocks you can adjust your shares, and you can trade lower amounts, and forex has many lots, so you can really trade lower risk in forex too. So forex and stocks are going to be lower risk markets. Even the mini contracts in silver and other commodities are too much risk sometimes. So anyway, again, I'll wrap this up and we'll talk about this some more later. Thanks for listening.